The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman here sitting in for Larry Pesavento on this 24th of February, Wednesday. So I'm just showing you right here on the left side. This is the left side of the daily chart with the Chapman wave notations, alphabetized. In the middle is the weekly chart, and on the right is the monthly. Right here in the bottom is 120. We don't need that for the moment, so let's get rid of it. Got a big question mark for April. And a lot will depend on the last few days of March, coming up in the next three sessions. And what happens the very first week of March if the high that's made in February is not taken out? So we'll spend a little time on that. But just let me give you the numbers. The Dow on today's Wednesday, on Friday, went to an all-time high of 31,653.48. The next day, it went to 47.53. The next day it went to 31,653.48. Yesterday, 0.48, remember? Yesterday's high was 53.38. 11 cents away from making a new all-time high. Look at the candles. You see the resistance right there? Over the last, we can even include, we can go back 5 sessions, 6 sessions. So it's going to be really important if for whatever reason, I don't care what the reason is, if the Dow starts trading in the 31,700s, that's a breakout that is really important. And the only reason why I mention it here, let's just go to the YM, which is the futures trading right now, down 55. We've made almost parallel highs. I call it in Chapman wave methodology. I better do this. I'll just take a moment. In the Chapman wave methodology, what we're always looking for is to identify the lowest low bar and then merely count each successively higher peak. Way back when I used to hand chart, I did this in pencil, and I found something that I call the 7-wave form. Meaning you go up to peak A, that's 1. It becomes a peak A on that down move. That's 2. 3 gives you leg B. 4 gives you peak B. 5 gives you a leg C. 6 gives you peak C. And 1 penny above C starts leg D. And that continues the 7th wave until it pulls back at 8. Then I found over the years, and I found this, funnily enough, when Fidelity was my first big client back in 1987. In the summer, they had me on a trial, and they said, okay, we like your work. And then comes August, and I get this thing, and I've got the daily chart going to a D, and I said, something's wrong here. It looks like it can still go to an E and an F. And I had to alphabetize, and that's when I discovered you can actually go to a G. But once you get to a G, like the piano, like in music, there is no H. A, B, C, D, E, F, G. Well, you have to look and see if you recycle. So what's really important is alphabetize to 6 higher peaks, but it's that 4th highest peak, peak D, where other things can happen. All right, and once in a while, I use something called the phantom peak because it just doesn't quite get there. That's where you get your peak C1, C2. We found this about 5, 6, 7 years ago. It happened in the euro dollar over and over. It kept getting to a peak C1, and then instead of making that one tick to a new leg D, it just failed. So that's something we keep in mind. So here we are at peak C1, C2, C3. If there's no new high today, very important phase. Now, the reason why I want to spend a little time on that is if you look at the ESH21, the E-mini, there's an alternate count. But look, everything about this says it should be pulling back. But in the wave count itself, if I go to the actual SPY, that really looks like, look at the trough made in the technicals of the stochastic on balance volume, the blue line. This is the MACD. This really looks like it should be a B. There is an alternate count based on the S&P and based on the E-mini. But at this particular point, that the numbers tell us is a pattern that I talk about very often, which is called the falling axe, and it's important for me to show it right now. And that is when you make a high, not you, but whatever you're following, whatever tradable it is, and then it starts to pull back. Usually that high comes at a D, E, or F, and then you make lower highs and much lower lows. And then all of a sudden, it finds a base, and it turns around, and if the rally can break that resistance line and close above it, you have the potential to make from the Chapman wave falling axe or declining, expanding cone, a lot of words, a Chapman wave 1-to-1 parallel extension, meaning you could rally and the number of bars up could equal and the degree of angle could be the same, breaking to new highs above that left side high. Well, that's the pattern we've got right here. And let me just show it to you in the SPX.X. That's the actual. So the E-mini right now is down 8. It was up earlier on. It was up 15. Then it dropped sharply. I think it dropped out to minus 15. Now it's at minus 8 at 38.69. Well, we've got this pattern. There was a cup formation that was potential. And then all of a sudden it changed, making lower lows and lower highs. That's the theme of a down move. So what I'm going to do is I'm going to show you the cup formations are potential, but you've got resistance right there. I'll make it blue so that you can see what I'm talking about right here. There we go. Color blue. And a declining lower highs and much lower lows. And all of a sudden it stops, attempts to make a V-shaped pattern or a cup formation. Remember, we're only looking at 3 basic patterns, the straight line, the cup, or the arch. And here we are. We'll see what happens. So in the next, I would say next 3 days, it should be quicker than that. But if in the next 3 days we don't take out the low that was made yesterday in the S&P of 3805.59, let me just put that in here. Otherwise, I'll have to keep 3805 point something 999, 8979. I don't know. I'll just put 79, and then I'll check it out. That's going to be important, and that was 59. I think there was a 9. Okay, so this is very important. So I don't want to waste time now. I've already discussed what we're looking at. If there is a close in the next 3 sessions above this trend line resistance, and let's put it in the S&P cash at 29.22, that's going to be really important, and says that all these stocks like Amazon, which had a tremendous, look, 34.34, round number high. Always look at round number high, peak D high on the around about the 2nd or 3rd of February, plunges down to a low yesterday, under 3,100. That's 10%. A 10% drop is quite big. Peak D in the weekly chart, and you can just go on and on and on. Larry always talks about Apple. Look at that move, 145.09, peak D high that was made back earlier on. That was in January. Plunges down to the low yesterday of 118. So you got 37 points. That's what 18-something% decline. So all of these could be ready for a bounce, and you've got to consider that. Well, there's a lot to talk about. I want to talk about Bitcoin as well. So Basil Chapman sitting in Bitcoin is up 1680 at 49,340. Made a high just 3 days ago, 790. It's Chapman be broke again.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman sitting for Larry Pesavento. So I was speaking about those peak Ds, that you can go higher. But at peak D, you lift your foot off the accelerator, you hover over the brake because it's a caution sign. Here's your peak D in the E-mini, and right here at, let me give you the exact time, the 10-minute chart of the S&P E-mini makes a double top at 1530, so that's 330. Last night, and then all of a sudden, it makes that peak D, and it hits the 200-period exponential moving average. Look how it acts as a fulcrum. So I know Larry has his own, everyone has, TFNN has their own techniques, and it's wonderful that we listen to one another whenever possible, we learn from it, but we have our own techniques. And what I've always said about techniques is what you want is to take something, and then you don't want to look at the other person and say, did I just get that right? You want to get it to the point where it becomes part of your vernacular. It's not my technique anymore, it becomes your technique. So in this particular instance, you got the cup formation right here, a drop bucket. In other words, it fails, it comes back. The 200-period moving average was support, 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 boom. All of a sudden it becomes resistance. You go under it, you come all the way back, peak A, B, C, D, E. And then there's something like a rogue wave or a right arm extension. You see the green line, this 9-period moving average, you see it never went, it didn't turn pink. It didn't cross negative as it did right over there. And look what happened when it turned pink. Look now what's happening after it turns green. And you get this extension of these two peaks, and they go to peak F and then a G. And then that's the 6th highest peak. Kaboom, it comes down. And then the 200-period moving average, which before was support, bam, it goes right through. Now it's resistance. So that makes 3874 to 3877, where the 9 and 14-period moving averages are. That's going to be important that by about 9:10 this morning, about 9:50 this morning, 10 minutes to 10 Eastern time. You want, if you're a bullish, you want to actually see 3890. We said 3865 right now. But just to be conservative, 3877, that's 11 points up from where we are. You want to see that. Otherwise, we'll be coming down and we'll start to test the low right here. We've already done that. And then this low at 120 this morning at 38.51, that's going to be important. So that's the 10-minute chart. It applies, everything applies. These are fractals, so whatever applies to the 10-minute chart or the daily or the monthly applies to the 1-minute chart. Peak G right there at 728 or something, pulls back, holds the green line, goes to a peak D, slightly higher high, and then right there at 753 this morning at 3896.50, it gives you a signal with a little double top there. And you can see the MACD, the moving average, is negative. Stochastic only held above 80% for a short while. Plunged, on balance volume, blue line plunges. And now where are we? We're making the pattern that I call the lowercase h. Remember I said those patterns that we're looking at? You've got this arch formation and a retest at the low. Now the S&P is down 14. So I'll explain a couple of things. I just wanted to do this. I wanted to finish some of those. Let me just show you the QQQ NDX 100 made a peak D at, here we go, right there, at 338.19 mid-March, and all of a sudden it drops down to just on the 310 level. Has a nice spike intraday yesterday, gets to 321. Now it's trading at 318.62. The MACD is weak, the stochastic weak, the on-balance volume is real close to some kind of a bounce, so we've got to watch that closely. And you see this S for sell. That S is saying, or short, that S is saying that the 9-period moving average has just crossed below the 14-period moving average, confirming that the Qs, the NDX 100 trading vehicle, are now in a sell mode on the daily. The weekly hasn't given a single signal. It's still in a buy mode, and all the indices in buy modes. Look at the IWM, the Russell 2000. The Russell 2000 is trading at 222.30. It's up 54. This is the one, the small caps. I should say, mention for some kind of clarification. For subscribers to my opening call, we've been long the IWM, the Russell 2000 ETF, since 173.31 on the 11th of November, taking two tiny little bits off, plus 13%, plus 21%. And here it is at 222.36. Here's this Chapman wave falling axe formation. Let me make this blue so that you know exactly what I'm talking about. And sometimes I start off a little conservatively. You see, that's the top of the candle there. But this is the top of the candle here. So to be conservative, I'll lower that. The boom comes down, and it says these are the levels I'm watching. So if the IWM is able to trade in the next 3 days above 227.50, it says, great, now I can retest the all-time high of 230.32. That's going to be real tough to do, but the 9-period moving average is still very positive above the 14. MACD's weak, stochastic weak, on-balance volume is terrible. Price is the arbiter of a trend. So far, the price is holding very nicely. I'm real close to a sell signal, not yet a sell signal. Weekly is a peak D, very strong. Look at that monthly leg C. I'm talking about the monthly charts. 2021 should still see much higher highs. Look at the S&P, even if there is a pullback here. Look, S&P's in leg B. It should still make a peak B by a lower high, then a leg C, then a lower high, and then a leg D higher. So overall, 2021 should see higher highs. So let's go back to SMHs is really the clue. SMHs right now down $1.50 at 240.74. There's no way I can count this, and I have to tell you, it's really unusual to make all-time highs in a daily chart, let alone a weekly or monthly, at a peak C with a major top. So all I can say, I don't know what this is. It could be a peak C1, C2 here. It's that just missing the leg D. But at this point, I don't know. All I can say is that it's held well, and wherever the SMHs go, mostly the general market is going to go in that direction. So let's go to the TLT. This is so important. Look at that. Yesterday, we had a little doji candle in a leg D. We're now at 139.56. Now I can go to this chart that I wanted to talk about before. On the left is the 30-year TYX, 30-year T-bond yield, the 10-year TNX, 10-year T-note yield, the 5-year T-note yield, a cyan, FVX. And look how they broke out. And we've been talking about this for quite some time. Look at that beautiful cup formation, breaks out. This is what I think is going to spook the market. Yields. I said, for every, I always talk about the news itself, how the market handles news. So in this particular chart right here, I think I was talking to Larry. Yesterday I was on my show. I said maybe I'll have to start making a note of, let me just get the right one right there, of this particular chart right here. This is a chart where I show dark news cloud cover. I had a webinar on this, and what it says is when the market ignores news, that same news can get repeated, and then all of a sudden the market wakes up and says, oh my God, yields. Well, we had yields been going up for weeks, but all of a sudden it could be that now we get bad news, and that says that I'll talk about this when we get back, because we need to talk about what implies that the move down is going to continue lower, and that has to have the market respecting bad news as being important, the market has seen the futures deeply down, trying to rally, and then closing deeply down, and the volatility index closing at highs for 2 consecutive days. I'll be back in a minute. Basil Chapman, sitting in for Larry Pesavento.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find a newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So Basil Chapman sitting in for Larry Pesavento. Markets just opened. I'll run the numbers in a minute just to show you the futures. The 1 minute chart, there's that arch formation. I didn't talk about that, did I? For those of you new to my work, let me just do this. It takes a second. Did I? No, I didn't. So I'm always looking at pretty much 3 directional patterns. One is a straight line up or down. 2 is a cup formation. It could be a V-shaped formation. You're going from one level down and then back again. Or the arch formation, going from one level up and then coming back down again. And a combination of 1 and 2 and 1 and 3. So 1 and 3 is red, because this is what I call the dreaded H. If you take out that left side low, you can keep going lower. And on the right is the reverse Y, because if you take out the left side high, you can keep going higher. And what are we seeing here? We've got the dreaded H pattern right here, and it went under it. But now you see the V-shaped pattern in the unbalanced volume. You see the stochastic. You're rallying nicely. You're down only 5 points. This is going to be a very important day because of a number of factors. So that is the 1 minute chart. And here is the, there is the 10-minute chart. I believe this is a 10-minute chart. Yep, 10-minute chart made that peak G. There's that beautiful arch formation, took out that left side, dreaded H, left side low, and went even lower. And then it had a real nice bounce from 1 o'clock this morning, peak A, peak B, C, D, E. And then it had what we call that spike to the upside, that right arm extension, pulls back. And now you can see the 200-period moving average. Look at that resistance right there, resistance again. That the pink line is the 9-period, the 9-period exponential moving average. We'll see how it handles it. So I want you to mention that. And here's a couple of things that I also want to talk about. If it's how the market responds, I don't care about anything else. It's whatever the news is. If the market takes it seriously and starts to go down and then continues to go down, you have to see double digits. You have to see the futures open double digit down, try to rally, and then close double digit down, strongly double digit down, even lower than the open. And then the next day, try to rally overnight and then fail, and you open up about 15 to 22 points down, and the S&P tries to rally again, and then it closes at a lower low. And that means it's taking the news very seriously. So we don't even know if it's taking the news seriously right now, because the futures, the TLT is the look at this. You're down right here. This is brand new territory. We haven't been here since, look. We haven't been here since the beginning of 2020. You remember when in March of 2020, we were looking at when we were going into 2019. Remember that? The Fed was talking about higher rates. Well, all of a sudden, you've got to move up in the rates that says at 2.28 in the 30-year, 22.89 there, 2.28, and in the 1.4 area in the 10-year. These are numbers that we haven't seen for quite a while, and it's not that they're there. It's the potential that they can continue rising. So what it does affect is many things, but what I discussed is that internationally, globally, look, the global timber and forestry ETF has done fantastically. It made a leg F in the weekly chart. This could be a peak F at 88.48, and I'm going to put it together with copper in a minute. But here's the housing index, the Philadelphia Housing Index, HGX, pulling back from a peak E 3 weeks ago, not really crashing anything. So it's how the market responds and how all the other indices respond. So I wanted to show you a couple of things right here. So we're going to go to live action. So here we go. On the Dow is now down just 3 points, down 1 point. This is really important. So I had a question come in. So what exactly did you do? You had mentioned that you're going to buy some insurance. We were able yesterday to buy some insurance right at the day's high in the Dow. Excuse me, dry throat. Oops, let me have a little more. There you are. Can talk again. And how I'd say to subscribe to my opening call. Yes, we are still long the Dow starting from March 23rd. We did it via options, and then a week later we went into the diamonds and have held those. We've taken some off, but we also bought puts, and we got them yesterday at the day's high. I'm always very nervous when you get the exact tick. You are the low tick. In this case, for the put options. That just makes, how often does that really happen? Well, it happens often enough, but it's scary because, so we'll have to see. And I've tightened up the stop. It's an option, but, we I'm always a little risk averse for subscribers to my opening call. And we were able to short the S&P also at the top tick of the day. And we'll see how that's going to work out. So the question is, so we are long in the intermediate term, the Dow. We are long intermediate term, the Russell 2000. And now we're starting to have to make some decisions about many things. And we're long the BTC, which is the Bitcoin, essentially from 12,400s via the GBTC. And it skyrockets to 57,790, and the GBTC, and I want to talk about that in a moment, skyrockets. I had to redo my notes. Some of them got lost. 58.22 was the high. So we're going in from 1240s, and we've taken off little bits all the way up. The last one was for about 278% gain. However, look, at 58.22, this is something that's very important. So I want to just take a moment and talk about some of the techniques that I look at, and I'll be discussing some of these techniques a week on Tuesday week. Yesterday was Tuesday, a week from yesterday. I have a live subscriber webinar coming up. It's just for subscribers, but you can subscribe. You'll be able to subscribe and get a money-back guarantee for 30 days if you're dissatisfied, and you'll be able to go to my at least 7 or 8 webinars on all these different techniques. Some of them I discuss in great detail. So the technique that I discovered years ago, I call it the Chapman wave Roman candle. What does that mean? If it occurs at a top of a run, well, you don't know it's the top of the run, but you're getting D, E, or F in the Chapman wave notation, and you get this candle that opens, sort of gaps up, has this tiny little wick, spirals to the downside, and then rockets back up and closes about halfway above the entire candle. I call it, and red, I call it a Chapman wave Roman candle. Why? You know what happens with a Roman candle? You light it and okay? So the rule of thumb is that if you go halfway into the wick on a shorter time frame and hold there for a certain period, there's a really good chance. Not only are you going to test the low of that candle, but you're going to take it out. I usually give it 2 days. The best is when it happens the very next day. Look what happened. Plummets. And the Bitcoin futures continuous contract goes from 57,790 down to a low yesterday of 44,900. So here it is at 49. Very nice bounce, but it's just a bounce. And I'm going to talk just a moment about the GBTC because NAV, the net asset value, I'm a little concerned about this. I'm concerned that this tends to once in a while blow up. You have to know what to do. I'll be back in a moment. Basil Chapman, Tiger.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. Sorry, I spoke into the commercial, so I'll have to repeat that. But basically, what I'm saying is that I have a live subscriber webinar coming up. It's called "What Impact Will the Tremendous Increase in the Public's Participation in the Stock Market These Past Few Months Have in 2021?" It's just too long. I don't know why I made it so long for a heading. Anyway, so is that a market positive? Are there examples that we can look at? What are the negatives? Which sectors could benefit? What stocks fit the theme? I'm also going to include infrastructure for that particular webinar because it's really becoming quite important. Does it portend a sudden deep market slump? What technical tools should continue to work as the economy opens up? And will consumers go back to the way things were? What COVID-impacted changes will become a part of the new economy? This webinar will be archived for all subscribers if you cannot attend live. It'll be Tuesday, March the 2nd, 4 o'clock to 5:30 p.m. I think a lot of people are working from home, but it's archived, so you'll be able to get to see it. So the question about the Bitcoin, I'm going to get you in a moment, but I did have a question in there which I want to get you right now because it's relevant to exactly what we're looking at. This is a leg E, maybe a peak E in the crude oil continuous contract. So there's your peak C1, C2. Look how nicely that one worked way back there in January. Pulls back sideways, essentially starts a brand new move. Peak A, peak B, peak C, peak D. Leg E, call the leg E until that bar, whatever time frame it is completed. And then it'll become a peak E if there's no new high above yesterday's continuous contract high of 63 round number high. Oh, I love round number, 63. So it's already made it peak E. It doesn't have to get there, but the 120-minute chart made it peak D. It's making this cup formation with a double top potential. So it says there could be another slight bounce towards the low 63s, but I would not be surprised if crude oil is getting ready for some kind of a pullback. And it might be shallow. You don't know yet until you start the first move to the downside. But look at this Chapman wave inside track repellent zone in the continuous contract, the monthly chart. We have to break above that resistance. This is a repellent zone. Look at the time that it took to go from there to there. This is a little bit shorter, but it's got a bit of a match in terms of time. So it's going to be really important if at any point in the next 2 weeks, give it 2 weeks, there is a close in the continuous contract decisively above in the 66s, 4 points above from where we are. That's just a breakout that I think is going to impact the market negatively as well. Let's just look at this, the TLT one more time. The TLT, look at that move in the monthly chart. Remember, what did I say at peak D? You lift your foot off the brake, hover over the brake, take your foot off the accelerator. Peak D at 179.70 in this incredible monthly chart. Look at this. Peak D, 179. There's your dreaded H pattern, the lowercase h that takes out the left side low. Then you can get a one-to-one to the downside. We've done that. We are testing the 50-period. I think that's the 50-period exponential moving average. The MACD's turned down. Stochastics turned down. On-balance volume is good, but turned down. Look, you're another month of this. There's a monthly chart, and you're going to get a negative crossover where the green 9-period moving average would give you a buy signal right there. It says L for long, right there on April of 2019 in 122 area. Look what happens. We're at 139 after being 40 points higher, 179. This is serious stuff. First time that we've had something in the market. Now, I've been saying for quite some time, I had the expression for at least 20 more, maybe 30 years, the Japanization of U.S. bond yields. In other words, bond yields should go to almost negative, just like it happened in Japan. About 6 months ago, I said, everything I'm looking at says that theme I might have to get rid of that theme, that there's a chance that when inflation finally breaks to the upside, the Fed just isn't going to be able to handle it. So that really is an issue. That takes me to the 4 areas that I often talk about. That's interest rates, gold, and gold should have been rallying sharply here. Instead, it's pulled back sharply. It's down 18 points. It got repelled right at the 14 and 9-period moving averages. So this continues. And that just says to me, you've got to be careful because the fear factor, which gold has always been historically going back to the beginning of time, has been used that the proclivity to go into gold in moments of uncertainty, especially when you're looking at the bank index being very, very weak. Bank index right now is very, very strong. Look at the XLF. The reason why we have a bank stock and we want to hold it for a while is because these are breakouts. Look at this. Let's use leg C and the XLF. So a lot of things have changed. What took over? Bitcoin. Now I can go back to Bitcoin. So Bitcoin now is up 1,300 at 48,985. That became the go-to place for a whole bunch of reasons. Part of the reason is the financial reason. Another part is that you've got really big players in the market. Finally, you've got some people that supposedly have great acumen are the ones and money are in this in a big way. And that's the reason, especially the other day when we heard that Tesla has a huge part of Bitcoin, that made me really nervous. And I said, Bitcoin is in a sell mode. Be careful. And the target I had was different moving averages. And it plunged yesterday from 900.40 way back in January 25th to yesterday's low of 619 round number low. I love round numbers. That says this could be a little bit more of a bounce, but I suspect the H pattern will come into effect and it will be going retesting these lows at some point. So that's very important. So Bitcoin, now what I was saying is, and I just got an article and I'm going to be reading it, talking about the NAV, the net asset value of the GBTC. I don't know anything about that. It just, to me, I typed it in there, huh? It's really complicated, but there absolutely are people. I think Bitcoin is obviously here to stay, but the trading of Bitcoin, how can you have it as a currency when you could have bought a Tesla at, you could have used that money to buy a Tesla, let's say 3 years ago, and you're looking at 4 days ago, you're looking at it and you say, oh my God, that Tesla I paid 4 Bitcoins or whatever it was at the time, and now look at the price of Bitcoin. How can you do that? How can you go to the post office for a stamp and pay with the Bitcoin? It reminds you of, you remember the period of inflation back in the 1970s? You had to go to the post office to check what the price of the stamp was because the prices were going up so quickly with inflation. So that makes it really different. You want something as steady as the dollar, even though steady means it's relative, right? Yeah, the dollar was at 102.99 dollar index. It went down to 89. But that's not like Bitcoin. That is just wild. So So I agree. In the Dan Peak G says, Bitcoin is not a currency, it's a store of value, but it is being used as well as a currency. So a store of value just implies, like you used to buy gold and put it into a safe. Yes, it is an insurance policy of sorts, but that whole net asset value, I've seen ETFs blow up because of that net asset value. So that makes me a little concerned for subscribers. What do we do and how do we protect? I'm not sure, but I figure that for now. I'll be back in a moment.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Just final segment. Let me show you. Here's high-grade copper. Remember, I showed you the lumber, the wood, WOD, which is the ETF for global lumber, timber and forestry. Well, if that's moving to highs and copper is moving to highs, internationally, the global economy should be a lot better than what we hear. So this is important, and I do think that copper is getting in leg D. I think it's getting close to at least a digestive phase. The 4.03 to 3.93 area would be very strong support if there was a sudden slide. So before we, I have to wrap up here. We're going to be looking at my show. I'm going to do my show at noon, the Tiger Technicians Hour. Also, my newsletter is the opening call, daily newsletter, very comprehensive. We've got a lot of positions, and we've had some very, very nice gains. I think some of those really big winners are going to be coming back, and we'll have to be looking to get back into them. In my webinar coming up next Tuesday, I'll be talking about this, the IAI, the Broker-Dealer Index, the ETF, which we're in from about 45 back in the day after the low of March the 23rd. And we've been in, and here it is at 91. I'm talking about this and what the implication is and what sectors are really good going into the rest of 2021, and what this particular IAI is telling us and where the support is. And if you've not been in it, you want to get in, where would we be looking to get in? Very important. So the market is not breaking down right now. It's holding quite well. In fact, we're going to see how we close. It'll be great to do the show at noon in another 2 hours' time, because we'll be able to see what's working. Look, the Qs are still stuck down 3. The IWM, which was having a really good session at the close yesterday, it's up nicely. It's up $1.86. The Dow itself, let me just do that one more time. The Dow itself is down just 7. I don't know, is it going to break to a new high? Look, the SPY itself, everything about this really looks like that's a B and that it really wants to go higher. But the technicals are starting to deteriorate, yet the 9-period moving average is still a very, very mixed market. It's very selective, and that selectivity is what we're going to be talking about a week from this past Tuesday. So next Tuesday, go to the front page of TFNN, you'll see it. Have a wonderful rest of the day. I hope I can see you at noon today. Otherwise, have a great one. Back tomorrow, and great program for the rest of the day. Stay tuned to TFNN. See you soon.